Very good morning, everyone. How are you all? Everyone fine? Super. Today we are going to start lecture number 3 for CA Inter Advanced Accounting regular batch. Last day we have started accounting standard 2, that is valuation of inventory. Let us revise once whatever we have done for AS2. So we have understood that what is the meaning of inventories. Inventories are assets which are held for sale in the ordinary course of business, which are held in the process of production, which are held in the form of material or supplies to be consumed in the process of production or for rendering of services. In simple word, we can say for manufacturing organization there are three types of inventory: finished goods, raw material, and WIP. And for non-manufacturing, there is only one type of inventory, that is stock in trade. Now, what is the objective of this AS2 is to measure inventory on reporting date. So for the purpose of measurement, what is the valuation criteria? They will value that cost price or net realizable value on reporting date. However, initial recognition will be done at cost price only. Then what are the component of cost price? For that, if you are doing valuation of stock in trade, then cost of purchase stock in trade will be invoice price minus trade discount rebate plus non-refundable duties and taxes plus any directly attributable expense to bring the inventory in present location. All these added together will be the cost price of stock in trade. For manufacturing, we need to find out cost price of finished goods. But for that, first we need to find out what is the cost of purchase of raw material. It will be similar to whatever we have done for cost of purchase of stock in trade. That is invoice price less trade discount rebate plus non-refundable duties and taxes plus all directly attributable expenses to bring the inventory in present location. That will be the cost price of raw material. If somebody asks you what is the cost price of raw material, this is the answer. After that, raw material will be converted into finished good. For that, the entity will incur some conversion cost. So conversion cost will be also added. That will include direct labor cost plus production overhead. Now production overhead will be of two types: variable overhead and fixed overhead. Now we have understood that variable overhead will be allocated to each unit on the basis of actual production. However, fixed overhead will be allocated to each unit on the basis of actual production, normal production, whichever is higher. Okay, sir. Then we'll also add other costs. Other costs are those expenses which are incurred to bring the inventory in present location and in the condition of sale. That will be also added. Example are packaging cost, transportation cost from factory to warehouse, etc. All this sum together will be the cost price of finished goods. Then we have also understood that what are excluded from the cost price. So what are not included, that will be excluded and charged to PL as an expense in the year in which they are incurred. For example, abnormal loss. We have understood that abnormal loss will not be added to the cost price of inventory, it will be charged to PL account. Then storage cost, if necessary for production, it will be included. If not necessary for production, it will not be included. Then any administrative overhead and selling and distribution cost. Apart from that, borrowing cost will also not be included, but as per AS 16, it may be included. When it will be included, that will understand under AS 16. Then I have said that depreciation and amortization of the asset which are used in the production purpose will be also added. Correct. Then we also discuss one part that cash discount or settlement discount will not be deducted from invoice price. Only trade discount or rebate will be deducted. So cash discount will be transferred to PL account once it is received. Correct. This much we have done in the last class. Then there was one more point about normal loss. However, in our basic concept class, I have explained what is normal loss and abnormal loss. I have said the normal loss are recovered from customer, abnormal loss cannot be recovered from customer. It means normal loss, the cost price of normal loss will be spread over balance unit and therefore the cost price per unit will increase. So whatever normal loss, that will be spread over balance unit and the cost price per unit will increase. But abnormal loss will be separated, will be deducted, and that will be charged to PL account as an expense. This much we have done. We'll take one question to understand if there is a normal loss as well as abnormal loss, how to find out cost price per unit? Come to question number 5. Come to question number 5. Very important question. That on MRQ, must revise question. So what is the meaning of MRQ? MRQ means must revise before exam. Even though simple, the chances of this question for coming in exam will be very high. So I'll give you 3 types of questions. One will be expected question. I'll write down expected. One I will write on MRQ. MRQ means even though it is not expected, need to be done, because that question requires some attention before exam, even though not important, because what is my expectation can be can be different from ICAI expectation. So if I am expecting that it will not come, but the quality of question is very good, I will say MRQ. Okay, but this is MRQ as well as expected. So some question will be expected as well as MRQ. In a production process, normal waste is 5% of input. So 5% is normal loss. 5,000 empty means it is unit of measurement, just like kg. Full form is what? Metric ton of input were put in the process, resulting in a wastage of 300 empty. The total wastage is 300 empty. You can see 5,000 into 5% or 250 is the normal loss. So can I say 50 is abnormal loss? So any loss which is more than normal loss will be abnormal loss. Any loss which is more than normal loss will be abnormal loss. Then cost per empty of input is 1000. So they have given cost price only. Cost price they have given means there is a difference between purchase price and cost price. There is a difference between purchase price and cost price. Means what is just want to say that this invoice price less trade discount and non-refundable duties and taxes, add non-refundable duties and taxes. This is purchase. We call it, this is purchase price. But when you add all the directly attributable expense to bring the inventory in present location, that become cost price. So purchase price and cost price are different. I think in the last class, one example I have taken with trading account. I hope with that you have understood purchase account, carriage inward, etc. I have given. So carriage inward, transportation expense, loading, unloading, that if I add it, that purchase price will become cost price. Okay, sir. It means cost per empty is given. Thank you very much. The entire quantity of waste is on stock at year end. State with reference to the accounting standard how you will value the inventory in this case. It means first we need to find out what is cost price per unit. Okay, sir. So write down. So we are doing question number 5. Question number 5. You will also write down. What is the cost of purchase? First we'll find out cost of purchase. That is 1000 unit and 5000. 1 minute. There is 5000 units, my mistake. 5000 empty. And what is the cost price of one empty? That is rupees 1000. It means total is what? Rupees 50 lakh. Correct. Got this point? Now we'll divide by number of units. Number of units purchased after normal loss. So they purchased 5000, but what is the normal loss? Minus 250. Okay. Number of units left after normal loss, that will be 5000 minus 5%. We can say 250. It will be 4750 empty. So what is the cost price per empty per metric ton? It will be 50 lakh. 50 lakh divided by 4750. How much it is coming? 50 lakh divided by 4750. It will be 1052.63. So this is the cost price per unit. This is the cost price per unit. Correct? Understood? And therefore, what is the abnormal loss? What will be the value of abnormal loss? Abnormal loss. So abnormal loss will be 50 MT because total wastage was 300 MT minus 250. So 300 minus 250 MT multiplied by 1052.63. So into 50 if I'll do, that will be rupees 52632 rounding off. So this is the amount of abnormal loss, and this will be charged to profit and loss account as an expense. So write down as per AS2, valuation of inventory abnormal loss is not included in cost price of inventory. Correct? Such abnormal loss will be recognized as an expense in profit and loss. Have you understood? They have asked about only abnormal loss, therefore we have mentioned about abnormal loss. Only for your understanding, just try to understand. This is for your understanding. Whenever I am preparing trading account, so this is to link with CA foundation. What you used to do in CA foundation, now what we'll do in CA inter, that are different. CA inter may will prepare SOPL in vertical format, but to explain with trading account so that you become more what attached with the concept, and therefore I am taking trading account. Do you purchase to purchase? Purchase is 50 lakh, but effectively now you purchase 4750 units. 4750 units. Got this point? Effectively you purchase 4750 units. That you need to understand. You will not say that we purchase 5000 and therefore the cost price per unit will be 50 lakh divided by this. 50 lakh divided by this. That is cost price per unit. Out of that, how much abnormal loss? So abnormal loss will be either deducted from purchase, either you reduce from purchase, or you will credit trading account, and from this it will be charged to profit and loss account. Correct? So abnormal loss will be 50 into 1052.63. That will be how much? Already we have done 52,632, and balance will be closing stock because nothing has been sold. Let us assume that only. So that will be closing stock. That will be how many unit? 4,700 into 1052.63. That will be how much? 4,700 into 1052.63. That will be 49 lakh 47,368 rounding off. The sum total of these two will be equal to 50 lakhs. Check karo. 52,632 plus 49 lakh 47,368. Exactly 50 lakh means here we have done rounding off. I know there was some rounding off difference, so that I have already added. Okay, sir. So this is accounting. And now abnormal loss, this abnormal loss will be charged to PL account. That will be charged to PL account. Have you understood? Have you understood this point? Got this point? Yes, sir. Chalega. It means whenever you calculate cost price per unit, then the cost of purchase will be divided by unit left after normal loss. Balance unit left after normal loss. One more question I will take. Come to question number. Out of this question, or whatever question you have done in the class, just rounding off. Just round off. Today you know that 5 we have done, and suppose 6 we have not done. So 6 you need to do by your own. Correct? Suppose. So all the reference question has been given. So after this concept, this much reference question need to be done. So whatever question I am doing, just do give one circle, so that you will be able to identify that this question we have taken in the class. And whatever question we are taking in the class, that are very, very important. Whatever question we are taking in the class, that will be very, very important. Okay. Come to one more question. Question number 12. What is given? An entity ordered 13,000 kg of certain material at rupees 90 per unit. The purchase price include excise duty. Now, better you convert excise duty GST, because now they will give you GST. Return GST. It includes GST. It means 90 rupees include GST. Rupees 5 per kg. So 90 is inclusive 5. In respect of which full credit is admissible. Just delete SENVET and instead of that write down input credit. Input credit is available. It means, can I say it is refundable? So anything refundable, any tax which is refundable, whether it will be added or it will not be added. It will not be added. If 90 is inclusive of 5, we should deduct it because it cannot be added. Got this point? Freight incurred amounted to rupees 80,600. Normal transit loss is 4%. So normal loss they have given. So 13,000 into 4%. So 520 is the normal loss. And did he actually receive 12,400 kg? You can see out of 13,000, they have received only 12,400. Means total loss is 600. So out of that, how much abnormal loss? Abnormal loss is 80. Got this point? Correct. And the consumed 10,000 kg out of 12,400. How much consumed? How much already used in the production process? 12,400 minus 10,000. So what is the closing stock? So closing stock will be 2,400. Good question. So in this, you need to calculate a cost price of inventory. You need to find out the cost price of inventory. Can we do? Yes, sir. So question number 12. Similar question. But what is the difference? In the last question, they have given us cost of purchase. In this question, they have not given cost of purchase. So first we need to find out cost of purchase. Correct? So what is, how much? What was the purchase price given? How much given? That is 13,000 kg into 90. That is 11,70,000. But this is inclusive of what? Inclusive of GST. And GST is refundable. It is not a part of cost. What will do? Less refundable GST. Correct? That is 13,000 into 5. That is how much? 65,000. So actually your purchase price is 11,05,000. In this we'll add what? All the directly attributable expenses. So they have given freight. How much freight they have given? 80,600. So what is the cost of purchase? So your cost of purchase is now 11,85,600. Correct. Now we'll divide by what? So what is the number of units? number of units after normal loss, means how much effectively you purchase. That is 13,000 minus 520. 520 was the normal loss, is 12,000. 480. What is the cost price per unit? The cost price per unit will be 11 lakh 85,600 divide by 12,480 is equal to 95 rupees. So 95 rupees per unit is the cost price per unit. Okay, sir. Got this point? Now they have asked you to find out the cost price of inventory. So let us find out. So what is the cost price of stock of inventory? So how much inventory left? The inventory left was 2,400 into 95. So 2,400 into 95 is equal to 2,28,000. Suppose they have asked you the cost price of abnormal loss. What is the cost price of abnormal loss? Means this will be charged to PL as an expense. Got this point? That will be 80 into 95. So 80 into 95 is equal to 7,600. 7,600. And suppose they ask you what is the cost price of consumption. What is the cost of consumption? Cost of material consumed. The cost of material consumed will be 10,000 into 95. That is 9,50,000. 9,50,000. Okay, sir. Have you understood this much? Any doubt? चलेगा? Any doubt? Super easy. So first, always find out cost of purchase. Now you know what is the cost of purchase in case of manufacturing and in case of trading organization. The cost of purchase, then divide by number of units after normal loss. Then you divide these two, you will get cost price per unit. Cost price per unit. चलेगा? Okay, sir. The 12 also we have done. Okay, let me take one more question. Come to question number 18 we have already done. 18 we have already done. Seven you can do now by your own. This is similar to what question of 5. Do it by your own. Must do. Must do. Chalo, balance question. You can do by your own. Okay. 18 also we have done. Question number 11. Question 11 also it is similar to what? Question 5. That also you can do. But this is the favorite question of the institute. Favorite question of the institute. Okay, sir? Yes, sir. Okay. Now come to the two special points, special case. There are two special points. One is related to joint product. One is related to byproduct. Now, what is joint product? What is byproduct? That we need to understand. Just try to understand. Whenever we start any production process, so normally we have some input. Input means what? Raw material. So normally we'll first purchase raw material. So in a production process, yes, first we'll purchase raw material, then we'll put that into our production process. This is production process, and then finished goods will be produced. Correct. Finished goods will produce. But what happens? In some production process, what happens? Suppose you put one raw material, the finished goods will be more than one. Means they can be two or more than two finished goods. Suppose X and Y. So these are known as what? Joint product. These are known as joint product. So simply, can you say these all cost will be joint cost? Joint cost, and this joint cost should be allocated to X and Y. This joint cost should be allocated to X and Y. Now the question arises, it will be allocated in which ratio? Simple. Whenever there is one product, the allocation is not required because this entire cost belong to these finished goods only. But if there are two or more than two product, that will be joint product. The joint cost should be allocated to each joint product. Correct. It is as simple as, suppose Amul Industry started their production process. They want to produce butter, ghee. So raw material will be milk, and eventually they produce butter and ghee. Butter and ghee. So it means for butter and ghee, this is the joint cost. So how it should be allocated? How it should be allocated? Chalega. This is our question. Correct. So this is known as joint product. We'll come to byproduct after this. Got this point? To simple way. So what AS2 says that this joint cost should be allocated in the sales ratio. In the sales ratio of joint product at the point of split off. Okay, you can see this is the point where the milk is split off into butter and ghee. So at this point of time, what is the sales value of ghee and butter? At that sales value, the joint cost will be allocated. Simple. It means we need to estimate the sales value of X and Y at the point of split off, and in that ratio it will be allocated. In that ratio it will be allocated. Don't worry, the sales ratio will be given in the question. But sometime what happens? We just try to understand butter is produced, but butter require some more processing. Let's say, means suppose X is produced and X requires some more processing, and this Y also require some further processing, so that better product will produce. Got this point? So suppose this is the main product. This is the main product. So this cost is attributable only to X. This cost is only attributable to Y. So we are not here to allocate this cost. Means whatever cost is incurred only for X, that belong to X. Whatever cost incurred for Y, that will be allocated to Y. Understood now? So we are not concerned about this, but just try to understand if it requires further processing. It means X cannot be sold in the market. X can be sold in the market. It means you cannot find out a sales value of X. You can find out a sales value of XX. Similarly, you can't find the sales value of Y. You can find out a sales value of YY. Are you able to understand what I am saying? So in that case, what our AS2 says that if suppose you are not able to find out a sales value of X and Y at a point of split off, then find out the sales value of X and Y on completion of production. On completion of production, you can take this sales value, and based on this sales value, this will be allocated. This will be allocated. Means they have given two preference. They have given two allocation criteria. First, allocate joint cost in the sales ratio of joint product at the point of split off. If it cannot be measured reliably, if you are not able to estimate that, then in the sales ratio of joint product on completion of production. On completion of production. Very simple. Correct. So what they want to say? Let us read. The joint cost is allocated on the basis of sales ratio of each product either at a time of split off or on completion of production. Means this will be given first preference. If this is not given the question, then this will be second preference from examination point of view. The first preference will be given to sales ratio of joint product at the point of split off. If that is not given the question, then you will take sales ratio of joint product on completion of production. However, only one will be given, both cannot be given. If both are given, first preference will be given to sales ratio at the point of split off. Okay, sir, very easy. But sometimes what happens with joint product, some byproduct will be also manufactured. Now the question is that what is byproduct and how it is different from joint product? To give a clarification, byproduct and scrap material are different. Scrap is something different. So we are not discussing about scrap material. Scrap material are wastage. It cannot be sold in the consumer market. Got this point? So scrap are wastage that can be sold in the scrap market. So right now we are not discussing about scrap material. We are discussing about byproduct. The byproduct is also byproduct can be also sold to the consumer market. For example, Amul industry, from milk they are producing butter, ghee, and with that also buttermilk is produced. Now buttermilk can be byproduct. Buttermilk can be byproduct. Now when it will be byproduct? Are you able to understand? That we need to understand. It means when I am saying from milk, there are now three products. One is butter, one is ghee, one is buttermilk. You know about buttermilk? In Hindi we call it chhaj. What do you call? Okay, butter, ghee and buttermilk from the same production process. Means I'm not saying these are different production process. They are same production process. You'll get butter, ghee and buttermilk. Are you able to understand? So what our AS2 want to say that if the value of all these three are material, then all these three will be joint product. Then all these three will be joint product. Means the value of butter, ghee and buttermilk are material. Then so all three are what? Joint product. But if the value of butter is material, ghee is material, but for buttermilk it is immaterial, then this will be considered as what? Byproduct. And this too will be considered as what? Joint product. Understood? Now just try to understand AS. We apply only to material item. We do not apply AS to immaterial item. So what is material? What is immaterial? Just try to material means any information which are relevant for the user of financial statement to make the decision. Any information which are immaterial from user point of view to make a conclusion, for that we should not waste our much time. Are you getting what I am saying? So AS is only applied on material information. We don't apply AS entirely to immaterial information, because applying AS on immaterial information will be wastage of time. Unnecessary we are applying accounting policy of immaterial item, and that is not important from the user of financial statement point of view. And therefore what AS says that if any product is byproduct, so there is no need to find out the cost price of that product. But if it is joint product, you need to find out cost price, then compare with NRB and then find out what? Lower value. But in case of byproduct, why you are wasting your time to find out cost price? Better you measure at NRB. Some relaxation has been given. Are you getting? Just try to understand, when you are finding cost price, so you need to do some calculation. You are doing some calculation that will take some time. Are you getting what I am saying? To what they want to say? Whenever finished goods are joint product, then you need to find out cost price, then NRB, then lower. Now how to find out cost price? Joint cost will be allocated to each joint product in the ratio of sales, in the ratio of sales ratio, yes, sales value, correct. But if it is byproduct, correct, and byproduct is material, then too it will be treated as joint product and same treatment will be applied. But if it's immaterial means once the byproduct is material, it will be known as joint product only. I am just explaining to say that byproduct material, it is joint product, it is not byproduct. But if it is immaterial, then it will be measured at NRB, and such NRB is deducted from cost of joint product to find joint cost, and that NRB will be deducted from joint cost. Understood? So can you say here there is some relaxation? Some relaxation has been given. There is no need to find out cost price, only find out NRB and then reduce it from what? Joint cost, and then that joint cost will be allocated joint product in the ratio of what? Sales value of each joint product. Got this point? Have you understood? Now whether it is material immaterial, that information will be given the question, nothing to worry about that. So whether it is material immaterial, that will be given as an information in the question. So that will be specified in question. If question is silent, byproduct will be immaterial. If the question is silent, byproduct will be always immaterial. Suppose they have given byproduct is material, then it will become what? Joint product. Then you need to apply this accounting treatment for byproduct also. Okay, sir. Have you understood this point? Chalega. So what they have given? If byproduct, if the amount is immaterial, it must be measured NRB and deducted from the cost of main product or joint product. Correct. And good point is that treatment of scrap material will be similar to what byproduct, even though both are different. Accounting treatment of byproduct and scrap material are same, but they are not same. The treatment of scrap material will be same as byproduct. Treatment of scrap material will be same as byproduct. Okay. There is one question, and believe me, this question is super important. Super important. We have only one question, and the same question they are asking in CA inter exam as well as CA final exam. I don't know why. They don't have any other question, they have only one question. Come to that question. Question number 10. Question number 10. देखो, super important, super expected. Already asked in the recent exam, first 7 marks. In a manufacturing process of Vijay Limited, one of byproduct BP emerged beside two main product MP1 and MP2 apart from scrap. Now they have written BP, nothing is given, it will be material. You cannot consider it as material. They have given a byproduct, if nothing is given, it will be immaterial. Okay, sir. Details of cost of production process are hereunder. Raw material, wages, fixed overhead, variable overhead. Correct. Whenever question is silent, always will assume normal production and actual production are same. If normal production and actual production are same, then entire fixed overhead will be allocated to the cost price of inventory. In this case, because they have not given normal production, the entire fixed overhead will be allocated to the cost price of inventory. Then they give output MP1 this much, MP2 this much, BP this much, byproduct. Then closing stock as on 31st March 2012. Out of this much is left. Out of this much is left. Average market price of MP1 and MP2 is 80 and 50 per unit respectively. Byproduct is sold at 25 per unit. There is a profit of 5,000 sale of byproduct after incurring separate processing charges of rupees 4,000 and packing charges of rupees 6,000. 6,000 was realized from sale of scrap. Calculate the value of closing stock of MP1 and MP2. Okay, chalega. Got this point? It means, can you say in this first we need to calculate NRB? So how to calculate NRB of byproduct? NRB of byproduct is nothing but expected sale price minus expected selling expense. Means you need to find out the sale price, from that deduct selling expense. Selling expense, that is what NRB. That is NRB. So sale price of byproduct is given the question, and there are some expenses given to make such sale that become selling expense. If you deduct this, if you find out the difference between these two, that will be net realizable value. Okay, sir. Can we take this question now? Yes, sir. So coming to question number 10. Question number 10. So what we'll do? First, we'll find out joint cost. Right on. Calculation of joint cost. What they have given? They have given direct material. How much? 1,60,000. Then wages. Wages, how much they have given? 82,000. Then they have given fixed overhead. Fixed overhead. So actual production and normal production are same. I don't assuming actual production and normal production are same. Means this is the only assumption need to be taken. If nothing is given, this is general assumption and this entire amount will be taken. That is 58,000. Then we'll take variable. Variable overhead will be always what? Total amount only 40,000. So this become joint cost. How much? 1,60,000 plus 82 plus 58 plus 40. That is 3,40,000. Now from these, we'll deduct NRB of byproduct. The NRB of byproduct will be sale price minus selling expense. So how many units of byproduct was produced? That is 1600, and it can be sold at 25 rupees per unit. Check karo. So what is the total unit produced for BP? 1600, and it can be sold at 25 rupees per unit. And there are two expense incurring separate processing charges of 4,000 and packing charges 6,000. So 4,000 plus 6,000, 10,000. Correct now. So from these we'll minus 4,000 minus 6,000. It becomes 1,600 into 25 minus 10,000 is equal to 30,000. So 30,000 deducted. Similarly, we'll also deduct less realizable value of scrap. That is how much? 6,000. So what is the joint cost now? What is joint cost? 3,40,000 minus 30,000 minus 6,000 is equal to 3,04,000. So 3,04,000 is the joint cost. Chalega. Now we need to allocate this joint cost in MP1 and MP2 in the ratio of their sales value. Point number B. Allocation of joint cost. allocation of joint cost. We'll take MP1, MP2. First, can you give me what is the total output produced? Total output, that is 6250 and 5000. Correct. Then they have given sales price per unit. The sales price per unit they have given 80 and 50. So what is the sales value? What is the sales value? That is 6250 into 80 is equal to 5 lakh. And this is 2,50,000. What is the ratio of allocation? That is 5 lakh is to 2,50,000. That is 2 is to 1. We can simplify it now. Ratio of allocation. Ratio of allocation, that is 2 is to 1. So what will be allocated joint cost? Allocate. So allocated joint cost. Okay. So this will be what? 3 lakh 4,000 into 2 by 3. And this is 3 lakh 4,000 into 1 by 3. Allocate. So 3 lakh 4,000 into 2 divided by 3. It is 2 lakh 2,667 and minus karo 3 lakh 4,000, that will be equal to 1 lakh 1,333. So this is allocated joint cost. Correct. Have you understood? Now we can find out the value of closing stock. Write down point number C. Value of closing stock of MP1 and MP2. MP1, MP2. What is the allocated joint cost? That is 2,02,667 and 1,01,333. How much output? Total output, that is 6250 and 5000. Can you give me the cost price per unit? So how much? This will be 20.27. This will be 32.43. So this is what? Cost price per unit. And what is the NRV? NRV, because they have given sale price, so that will be expected sale price. Selling expense not given, so we'll take NRV what? 80 and 50. So what is the value? Value will take lower. Lower is what? 32.43 and 20.27. The value is lower. Correct. And therefore, what is the value? Correct now. What is the value of closing stock? So how many units left? That is 800 into 32.43. So 800 into 32.43 is equal to, that is 25,944. And this is what? 200 into 20.27. 200 now. Check karo how many units. You can see the closing stock is given yahan par. So 200 into 20.27 is equal to how much? 4054. This is the entire calculation. Calculation is very easy. And the same question they are asking at CA Inter and CA final level. It means the student are doing some mistake and therefore the same question is repeated. So why they are doing mistake? Because of calculation mistake. I don't know what calculation mistake you are doing, but it is very simple. It is very, very simple. Okay, sir. Okay, sir. But there is one point in the question that actually I have not given any stress when I was reading the question. And that point actually we have not used in our calculation. It might happen you have read it and now you are thinking that's why you have not used that point. There was one point, check karo. There is a average market price of byproduct is 25 rupees per unit. And there is a profit of 5,000 on sale of byproduct after incurring separate processing and packaging charges. You can see there is a profit of 5,000 sale of byproduct that we have not considered in our solution. Why we have not considered? Then I need to inform you. Actually, this point is not relevant. Not relevant means it is bakwas. Totally bakwas point. Why it is bakwas point? Because it will not be used in the solution and they have given to confuse you. Just try to understand NRV means sale price minus selling expense and sale price inclusive profit. So because they have given sale price, we don't want profit. If they have given cost price plus profit is equal to sale price. So since they have given sale price and sale price is inclusive profit, this information is not relevant. This information is not relevant. Okay, just write down one student note for your understanding. Write down. Correct. Go. NRV is expected sales value which is inclusive of profit and therefore profit of rupees 5,000 on sale of byproduct is not relevant. Is not relevant information for solution. Okay, sir. Just write down so that when you are doing by your own, you should be able to understand why we have not taken 5,000 in our solution. Okay, sir. Chalega. It means in exam, just try to understand. If you do not understand question information, that will be dangerous. So from exam point of view, question is most important. First, you need to understand question. Then you need to apply what concept. And then solution. Okay. It means first we need to give importance to question, then concept, and then solution. Got this point? So we'll do in that way. First we'll understand question, then apply concept, and then we'll do solution. Okay, sir. Chalega? Yes, sir. So we have understood the special point of joint product and byproduct. Joint product and byproduct. Okay, sir. Any doubt? No doubt. Now let us come to NRV. Net realizable value. Already I have said NRV means estimated selling price minus estimated selling expense. Same thing we'll do for finished goods and stock in trade. So NRV we need to find out for finished good, WIP and raw material. It means we need to do separate discussion for finished goods, WIP and raw material. So first we'll take for finished goods or stock in trade. Why? Because they are held for sale in ordinary course of business. Held for sale in the ordinary course of business. Correct. So simple. NRV is what? Expected sale price minus expected selling expense. So estimate sale price minus estimate selling expense. Nothing to say. I think you have understood. When I am saying NRV, NRV of finished goods. Correct. So that become estimated sale price minus estimated selling expense, and that become NRB. It means 100 is the what? Sale price. That is an expectation that it can be sold in future at rupees 100. And to make such sale, we need to pay commission to some agent. We need to pay some commission. It means how much we are recovering from sale. That is 90. So 90 is what? NRB. 90 is NRB. Got this point? Correct. It means if the cost price, suppose is the 120, and NRB is equal to what? 90. Understood? So this is the expected loss. How much expected loss? Expected loss is 30. And therefore inventory will be written down by rupees 30 to is NRB. We will say value is equal to what? 90. So inventory is written down by 90 to is NRB. So this become loss, and this will be charged to PL account as an expense. This will be recognized as an expense. Okay, sir. As per conservatism principle. Means what is the objective of this chapter? Objective of this chapter is to find out expected loss on sale of finished goods or stock in trade. What is the expected loss on sale of finished goods? That is the objective of this particular chapter, and that will be provided due to which concept? Conservatism principle. I think nothing to explain beyond this. Correct? There are two small questions. Come to question number 4. Question 4. X company limited purchased goods at a cost of 40 lakh in October 2005. Till March 2006, 75% stock were sold. So how much unsold? 25%. So what is the 25%? To 10 lakh become the cost price. The company want to disclose closing stock at 10 lakh, means at cost price. The expected sales value 11 lakh and a commission of 10% on sale is payable to the agent. It means 11 lakh is sale price and commission is 10%. So 11 into 10%, how much? So NRB become 9.90. Lower is 9.90. It should be valued at 10 lakh or 9.90. So 9.90, 9 lakh 90,000. Advice: what is the correct closing stock to be disclosed? So of course, the accountant is alive. We should value inventory at NRB, that is 9 lakh 90,000. So that is correct. I think this type of question, of course, you can do it. This type of question can be asked for 2 marks in multiple choice question. I think my help is not required. Okay, sir. You can do it by row? Yes, sir. So question number 4 we have done. 17 you do. Now coming to WIP, work in progress. Work in progress. Now just try to understand. Work in progress is semi-finished. Semi-finished means what? It cannot be sold. Means the objective of the entity is to sell semi-finished or finished good. Finished good. It means if you ask the management what is the expected sale price, means at what price you can sell WIP, they will say we don't know, because we are not into the business of selling what? WIP. And therefore, can you say sale price of WIP cannot be measured. Sale price of WIP cannot be measured. And therefore, NRB of WIP will be based on NRB of finished goods, which can be produced from that WIP. Means if you have some semi-finished goods, from that finished goods will come. So NRB of finished goods will be taken into consideration to find out what? NRB of WIP. Let me take one example. Just try to understand whatever I am saying. Right now we are discussing about NRB of WIP. Correct. For example, cost of purchase, COP means cost of purchase is 100. And cost of conversion, COC means cost of conversion is 125. So total become 225. So this become cost price of finished goods. Yes, sir. Understood. But right now what happened? Cost of purchase is 100, and right now cost of conversion already incurred is only 25. It means this become cost price of WIP, work in progress 125. So what is the estimated cost to complete? So can you say estimated cost to complete will be 225 minus 125, that is 100. This is the estimated cost to complete. Okay, are you able to understand? And can you say if you incur 100 rupees in future, you will be able to produce what? Finished good which can be sold in the market, which can be sold in the market. Okay, now let us discuss in two situations, case 1, case 2. Let's say expected sale price of finished goods, expected sale price of finished goods which will produce from that WIP is rupees 300 or 200, correct? So if this is the case, first one, what is the cost price of finished goods? The cost price of finished goods is 225. It means there is a profit. There is a profit of what? 75. So if there is a profit, can I say if there is a profit, expected profit, it means conservatism principle will not apply. It means there is no need to write down the value of inventory. So in this case, WIP will valued at cost price only, and there is no need to write down. There is no need to write down inventory. Got this point? In this case, what will be the value of WIP? Correct. That will be what? Its cost price. And what is the cost price of WIP? That is 125. So there is no need to write down. And the cost price of WIP is 125 because there is an expected profit on sale of finished goods. So if there is an expected profit on sale of finished goods which will produce from that WIP, there is no need to write down. There is no need to recognize any loss. Understood. But in the second case, you can see there is an expected loss. How much loss? 25 is the expected loss. Correct. So in this case, can you see inventory should be written down by expected loss? Inventory should be written down by expected loss. So in this case, you will say value of WIP is 125 minus 25 is equal to 100. 125 minus 25 is equal to 100. This is the concept. This is the concept. So can I say we need to first find out what is the expected loss on sale of finished goods. If there is an expected loss on sale of finished goods, that is the amount by which inventory should be written down. That is the amount by which inventory should be written down. Okay, sir. Have you understood the concept? This is actually the concept, and the same concept has been given by one formula in AS2. So what is the formula they have given? Formula to find out NRV of WIP. So they say first find out NRV of finished goods which will produce from what? That WIP. So NRV of finished goods will be 300 and 200 in different case. 300, 200. From this minus, deduct estimated cost to complete. So what was the estimated cost to complete? Already we calculated 100. So minus 100 and minus 100. So this will become NRB. This will become NRB of WIP. So NRB of WIP will be 200 and 100. Got this fine. And what is the cost price of WIP? This is 125. 125. So we'll do valuation at lower. So what is the lower in this case? 125. And what is the lower in this case? 100. Same answer is coming or not? You can see same answer is coming. So actually initially I have given concept. Now I am teaching you as per AS2. So AS2 has given this formula. What is the NRB of WIP? NRB of WIP is NRB of finished goods, and from that deduct estimated cost to complete. So you will get NRB of WIP. Then compare NRV of WIP with the cost price of WIP. You'll get the value. You'll get the value. Understood? The mere objective of AS2 is to find out the expected loss on sale of finished good, which is produced from the WIP. Which is we are going to produce from that WIP. Okay, sir. Have you understood? Yes, sir. The same formula has been given for WIP. First, find out estimated selling price of finished good. From that, deduct estimated selling expense of finished goods. This is the NRB of finished goods. Less estimated cost to complete. That will be given the question. This is the NRB of WIP. This is the NRB of WIP. Okay, sir. Chalega. Understood. Come to one question. Question number 1. Come to question number 1. Cost of partly finished unit. Partly finished means what? WIP. At the end of 2001-2002 is 150. This is the cost price. The unit can be finished next year by a further expenditure of 100. This is the cost to complete. The finished unit can be sold at rupees 250. This is the estimated selling price of finished goods. Subject to a payment of 4% brokerage on selling price. This is the estimated selling expense. Assume that partly finished unit cannot be sold in semi-finished form and is NRB 0. Of course, NRB will be 0 because we cannot sell WIP. But now they are confusing you. NRB of WIP 0. But NRB of WIP 0 because we cannot sell it in semi-finished condition. And this is the point where you will be confused. You will see NRB 0. NRB is not 0. You need to find out. Correct? So this they have given to confuse you. NRB 0 given to confuse the student. This is also bakwas because we need to find out NRB of WIP based on NRB of finished goods. Okay, sir. This is totally bakwas. Correct. The firm seeks your advice regarding the amount at which unfinished units should be valued for the preparation of final account. Let us do it. So we are doing question number 1. Question number 1. Okay. So what is the cost price of work in progress? That is 150. Now I'll find out NRB of WIP. So what is the estimated selling price of finished goods? That is 250. From this minus estimated selling expense, that is 4% of 250. So 250 into 4% is equal to 10. And from this minus estimated cost to complete. Cost to complete. The estimated cost to complete is 100. So what is the NRB? NRB become 140. NRB is 140. Right? And therefore, what is the value of stock of WIP? That is lower. Lower is what? Lower is 140. So 140 is the lower. That is the value. Super easy. This type of question can be asked in MCQs or descriptive question also. Super easy. I think my help is not required. Boli. Any doubt? Chalega. So one question I have done. 9 is I think similar question. We can do it by own. 9 is similar question only. Yeah. Similar you can do it by own. Okay. Come to the next point. Now coming for raw material. 1 second. Raw material cannot be sold. It means raw material valuation will depend upon expected sale price of finished goods, which is produced from the given raw material. We suppose I have the raw material right now. If I say, suppose, let's see, These are my raw material. Let's say these are my raw material. Correct? Raw material. And I have purchased raw material, and till now it is not put into the production process. So this is raw material. I production is not started. So we have stock of raw material. So right now we are doing valuation of raw material. Suppose it is put into the production process and production is not yet completed. This is my WIP. This is my WIP. And suppose the production is done and we have already produced finished goods. This is our finished goods. So raw material, WIP, and then finished goods. Then finished goods. Okay, correct. So right now we purchase raw material, but till now it is not consumed. It is not yet consumed. So how to find out the value of raw material? Correct. Once again, can I say in that case, valuation of raw material depends upon the expected sale price of finished goods, which will be produced from raw material. Which will be produced from raw material. Means what they want to say? What they want to say? If you are doing valuation of raw material, and suppose the cost price is rupees 100, you need to find out what is the NRV of finished goods which can be produced from the given raw material. Means at what price the finished good can be sold in the market which will produce from the given raw material. Correct? Are you getting what I am saying? Are you able to understand? Yes, sir. Correct. Got this point? Now, NRB, let's say NRB of finished goods is 300. And the cost price of finished goods I am saying, is 200. It means, can you say there is an expected profit? There is an expected profit 100. If there is an expected profit, conservatism principle will not apply, and then we need to value raw material at their cost price. So in this case, value raw material at cost price, that is rupees 100. This 100, let me थोड़ा सा change. Let us make it 250 and the profit is 50. Okay, understood. Then value raw material at its cost price. But if the NRB of finished goods, let's say it is 230 and the cost price of finished goods is 250, it means there is an expected loss. Expected loss is what? 20. Expected loss is 20. It means in this case one thing is clear that raw material should, the value of raw material, means the cost price of raw material should be written down, but by what amount? Understood. In this case there can be two situations. So in this case we need to value raw material, at lower of A, cost price, B, replacement cost. RC means replacement cost. Write down replacement cost. Write down replacement cost. Replacement cost means at what price it can be purchased today. Means one of the reason what AS2 want to say, that one of the reason why we are not able to sell the finished goods above its cost price. What can be the reason? The reason can be competition in the market, there can be decline in the price of finished good, or there can be one more reason, decline in the price of raw material. Due to recession in the market, there can be one of the reason why we are not able to sell the finished good at above its cost price, that raw material, the price of raw material has declined in the market. Means we purchase this raw material at rupees 100. Until now production not started. 1 year gone. Means at year end, the same raw material can be purchased from market at rupees 80. Means our competitor will purchase at rupees 80. Are you getting what I am saying? So there, if the competitor is purchasing at rupees 80, we have purchased at rupees 100, it is quite possible the cost price of finished goods produced by the competitor will be less than the cost price of finished goods what we are going to produce, and therefore we might be forced to sell at lower price. We might be forced to sell at lower price because of competition in the market. And therefore, what our AS2 says that value raw material at lower of cost price or replacement cost. It means in this case, cost price is equal to 100 and replacement cost is equal to 80. Therefore, value is equal to what? 80. Or they can be cost price is equal to 100 and replacement cost is 120. It means this can be also one possible reason that of course we are selling at loss, but reason is not the decline in the price of raw material. The reason might not be decline in the price of raw material. There can be other reasons. There might be a reason that this finished goods might become obsolete. If finished goods might become obsolete, what raw material will do? We can purchase this raw material right now at rupees 120 and actually we purchase rupees 100. In this case, there is no need to write down. It is 100 only. Got this point? Have you understood this entire case? So raw material, the valuation of raw material once again depends upon whether finished goods which are produced from that raw material is expected to be sold at profit or expected to be sold at loss. If expected to be sold at profit, then value raw material at cost price only. Correct? In that case, we need to value raw material cost price even if even if replacement cost is less than what? Even if replacement cost is less than cost price, because there is an expected profit. If there is an expected profit, we can't write down the value of raw material. Understood? But in this case, if the expected loss is there, so what AS2 want to say that one of the reasons for this expected loss is the decline in the price of raw material. Therefore, value raw material at its cost price and its replacement cost. So cost price is 100, replacement cost 80, therefore value is 80. But it is quite possible replacement cost is 120. It means the loss is not due to decline of the loss. This expected loss is not because of decline in the price of raw material, and therefore value raw material rupees 100 only. Got this fine? Have you understood this? But very good. And now onward, what I have seen that institute is asking question based on raw material. The important from exam point of view. Important from exam point of view, what they have written. If finished goods in which raw material will be incorporated is expected to be sold at more or equal to cost price of finished good, it means expected profit or you can say NRB of finished more than NRB of finished good is more than or equal to cost price, then value raw material cost price of raw material. But if the finished good is expected to sold at below its cost price, it means expected loss. It means in this case NRB of finished goods is less than cost price. In that case, value raw material at lower of is cost price and replacement cost. Formula is very simple. Only you need to understand now how to solve the solution, how to solve the question. Correct? Come to question number 8. Mr. Mehul give the following information relating to item forming part of inventory as on 31st March 2015. His factory produces product X using a raw material A. Product X from A. So A is what raw material? X is what finished goods. 600 units of raw material A Purchase at rupees 120 means this is the cost price. Replacement cost of raw material as on 31st March 2015 is 90. Right now, don't say lower because you need to find out whether finished goods are sold at profit or loss. That is the key point. Then 5 units of partly finished goods WIP in the process of producing X and cost incurred till date is 260. This unit can be finished next year by incurring additional cost of rupees 60 per unit. Okay. Then 100 units of finished good X at a total cost incurred 320. Total cost is 320. Expected selling price of product X is 300. Determine how each item of inventory will be valued as on 31st March 2015. Also calculate the value of total inventory as on 31st March 2015. Okay, sir. Now can we do? We are doing question number 8. Question number 8. Point number 1. Here is the value of raw material. Value of raw material. So what is the cost price of finished goods? You can see cost price of finished goods which can be produced from this raw material is 320. Is 320. And what is the NRV of finished goods? The NRV of finished goods 300. 300. Correct. So in the given case, finished goods are expected to be sold at loss. Correct. In the given case, finished goods is expected to be sold at loss. Therefore, raw materials should be valued at cost price should be valued at lower of point number A cost price. Point number A is replacement cost. The cost price given how much for raw material? 120, replacement cost 90. Right, 120 and 90. And therefore, raw material will be valued at rupees 90. First point you understood. Value of raw material understood. Now come to value of WIP. Value of WIP. What is the cost price of WIP? Cost price of WIP it is given. They have already incurred 260. Already incurred 260. Now I'll find out the NRB of WIP. NRB of WIP. So what is the NRB of finished goods from which will be produced from the given WIP? Is already we have 300. From this will minus estimated cost to complete. Estimated cost to complete. What is the estimated cost to complete? Is given how much? That is 60 rupees. We'll take 60. So this will be 240. And therefore, WIP is valued at rupees 240. lower na, rupees 240. Point number 3, value of finished goods, cost price of finished goods, how much? 320. NRB is equal to what? 300. Therefore, finished goods is valued at lower. Lower is what? Rupees 300. Done. Now what they have asked, what is the total, calculate value of total inventory. So let us calculate calculation of value of total inventory as on which date? 31st March 2015. Raw material, WIP and finished goods. So what is the units of raw material? 600, then 500 and 1500. This 600, 500, 1500. 600 into how much? 90. 500 into how much? 240 and 300. So 600 into 90 how much? 54,000. 500 into 240 how much? That is 1,20,000. And 1500 into 300 how much? 4,50,000 total. That is 6,24,000. Very super easy. Are you getting? Check karo. 6,24,000. Same thing they are also given. You can just read it. You'll be able to understand. Okay, sir. My presentation, their presentation may be different. But what presentation I am giving, that is easy to write in exam. So you can follow the presentation, whatever I am giving, and believe me, you will get the full mark. So there is no need to write down whatever ICAI is giving in the solution. Okay, because that is detailed and quite possible that much you can't write in exam. So of course we will write down that only what is possible in exam. Okay, and of course if you write down this way, you'll get full marks. Okay, sir. We'll take some more questions, but before that, we'll take a small break. After break, we'll continue. Okay, sir? Yes, sir. Can we start once again, everyone? Okay, ready? Chaliye. So before break, we were discussing about NRB. We have discussed NRB of finished goods, NRB of WIP, and NRB of raw material. Let me take one more question. Question 14. Very good question. Come to question 14. Calculate the value of raw material and closing stock based on the following information. You can see raw material X, closing balance 500 units per unit, cost price including excise duty. So now excise duty they will not give, they will give GST. Okay, because now GST they will give in exam. Excise duty just convert it into GST only, and credit is receivable on GST paid. So receivable, it is already receivable, means refundable. So can you see this 200 is inclusive of this rupees 10? So you used to deduct it because any refundable tax will not be added. Freight inward will be added, unloading charges will be added, and replacement cost they have given 150. Means what is the cost price of raw material? We can say 190 plus 20 plus 10. The cost price is 220 and 150 is what? Replacement cost. So what is the value of raw material? So what is the cost price? 220. What is the replacement cost? 150. So what is the value? Value is equal to bolo. Value is equal to अरे बोलना right. Value is equal to 150. If you are saying 150 means still now you have not understood. If you are saying 150, that it means you have not understood. Sir, you need to first calculate whether finished goods are sold at profit or loss. Means the valuation of raw material is based on the sale price of finished goods. So right now don't give answer. Now they have given information of finished goods Y, closing balance 1200 units per unit, material consumed 220, direct labor 60, direct overhead 40, means this total is how much? 220 plus 100 is equal to 330. Correct. Then total fixed overhead for the year is 2 lakh on a normal capacity of 20,000 units, while actual production has been 18,000. So it will be allocated based on normal or actual, whichever is higher, lower, higher. So higher, so we'll say 2 lakh divided by 20,000 is equal to 10. So we'll add 10 also. It will become 340. So 340 is the cost price. Now calculate the value of closing stock when NRB of the finished goods is 400 and NRB of the finished goods 300. So they have given two cases. So let me answer it. So we are doing question number 12. So question number 12. Case 1. NRB of finished goods is equal to how much? NRB of finished goods Y is 400. Correct. So what is the cost price of finished goods? That is already we calculated. How much we calculated? 340. And NRB of finished goods, that is 400. Therefore, value of finished goods will be lower of cost price and NRB, that is rupees 340. Okay, sir. This is point number A for finished goods. Point number B for raw material. So in this write down, since finished goods, since NRB of finished goods is more than its cost price, raw material will be valued at is cost price. That is rupees how much? What is the cost price of raw material? Already we calculated 220. It will be 220. Correct? Madam. Value of total inventory. Raw material, finished goods. What are the balance? Balance 500 and 1200. So 500 and 1200 multiply by 220 and 340. So 500 into 200 how much? 1 lakh. 1200 into 340 how much? That is 4 lakh 8,000. Total become 5 lakh 8,000. Understood? This is the first case. Case number 1, very simple. Come to case number 2. NRB of finished goods Y is equal to what? Now they have given case number 2. How much? 300. The entire game will change now. Rupees 300. Point number 8 for finished goods Y. Yes, we can add a Y. Correct. So what is the cost price? Cost price 340. NRB, it is 300. And therefore, value of finished goods will be rupees 300. Okay, sir. Then coming to point number B. For raw material X, raw material X na? This is X only. Since NRB of finished goods is less than its cost price, raw material will be valued at lower of its cost price and its replacement cost. What is the cost price? How much? That is 220 and replacement cost 150. 220 and replacement cost 150. Therefore, value of raw material will be 150. So what is the value of total inventory? Value of total inventory, raw material, finished goods, 500, 1200 into 150, and that is how much? 300. So 500 into 150 how much? 75,000. 1200 into 300 how much? 3,60,000 plus 75,000 do this 4,35,000. This is the answer. Then only you can give working note for the cost price of finished goods and cost price of raw material. That you can do. So, working note of cost price of raw material and finished goods. That you can do by your own. That you can provide. Have you understood this entire thing? Chalega. Same thing there. You can see they have also given. The raw material cost price less that input credit, whatever GST input credit, so they have first calculated cost price and finished goods cost price. This you can give as a working note. Then situation 1, when NRB of finished good is 400, NRV is greater than cost price. Hence, raw material and finished goods are valued at cost. Hence, both are valued at cost. Of course, it is correct. Value of closing stock. Then when NRV of finished goods is this much and NRV is less than cost price, hence raw material is valued at replacement cost and finished goods are valued at is NRV. So they have given this. You can do in this way also. Chalega. Okay, sir. Chalega. One more question. Question 15. Interesting. Read on MRQ. Must revise question before exam. Particulars. Opening stock finished good 1000. Raw material 1100. This is the opening stock of finished goods. Opening stock of raw material. Then purchase. Of course, this is purchase of raw material. 10,000 at rupees 1 lakh. Labor, overhead fixed, sales, closing stock of raw material, closing stock of finished goods. The expected production for the year is 15,000 kg of the finished product. The expected means this is normal. This is normal production. Due to fall in the market demand, the sale price of finished goods 20 per kg. This is NRV. And replacement cost for the raw material is 9.5. This is replacement cost. You are required to calculate a closing stock as on that date. Good question. Here, only one thing I need to explain. And if I will not explain that, you will do mistake. Okay. So we are doing question number 15. Question number 15. Here is the first we need to find out a cost price of finished good. So working note. Calculation of cost price of finished goods. Correct. So can you say we write on cost of purchase. Now when I say cost of purchase, normally you think you will take 1 lakh, but this is not the case. Can I say we need to take cost of purchase. Purchase means purchase of raw material, but whatever raw material which has been consumed during the year to produce the item. It is quite possible there was some opening stock of raw material which was consumed in this current year. So that will become the part of cost. So in this case, cost of purchase means will be raw material consumed. Raw material consumed. Got this point? So what was the opening stock of raw material? You can see opening stock was 1100. Then you purchased 10,000. Then closing stock was 900. It is 1,100 plus 10,000 minus 900. Nah. So 1100 plus 10,000 minus 900. It means 10,200 consumed. Now you take cost price per unit of raw material. Now this cost price of raw material will be either on FIFO basis or weighted average price method. Till now we have not discussed about FIFO or weighted average price method, but I know you know about first in first out method and weighted average price method. When I say first in first out method, means opening stock will be consumed first and then will take consumption from purchase. Weighted average means on an average basis. Now in this case, if you see opening stock, what is the cost price per unit? 11,000 divided by 1100. So 11,000 divided by 1100 is equal to 10 rupees per unit, and this is also rupees 10 per unit because both are same. Can you say on FIFO and on weighted average price basis your answer remains same because both are 10. But if one is 10, one is 11, so your FIFO and weighted average price method answer will be different. I just want to say that this depends upon FIFO and weighted average price method which you want to take. If the question is silent, normally we take FIFO. So both are 10. So okay, you can take 10 now. So you can take 10. But if both are different, then apply FIFO or weighted. Whatever you are applying, just write down as a note. Okay. Chalega. So 10,200 into 10, it become 1 lakh 2,000. This have you understood? This have you understood? Then we'll add, what we'll add? Direct labor is 76,500. We'll add direct labor 76,500. Then they are given fixed overhead. Now fixed overhead will be allocated on the basis of actual production, normal production. So in this case, normal production is 15,000. What is the actual production? Can I say actual production will depend upon how many units of raw material you have consumed. If nothing is given, you will say out of 10,200, you will produce 10,200 only. If nothing has been given, it means your actual production will be 10,200, considering there is no abnormal loss. Considering there is no abnormal loss, correct? It means normal production is equal to how much? 15,000. And actual production is equal to how much? 10,200. So you will do 75,000 divided by normal or actual, whichever is higher. You will do 15,000. So it will be rupees 5 per unit multiplied by 10,200. That only you will do. So 10,200 into 5 is equal to 51,000, and the balance fixed overhead will be charged to PL account as an expense, because that is not required. We are not writing a note for that, but you can write down that balance fixed overhead remain unabsorbed. It will be charged to PL account as an expense. Okay, sir. This become your total cost price of finished goods. That is 1,02,000 plus 76,500 plus 51,000. That is equal to 2,29,500 divided by number of units produced, that is 10,200. What is the cost price per unit divided by 10,200 is equal to 22.5. This is the first working note. Understood? Correct? Any doubt? Now we need to find out what is the NRB. Now we need to find out what is the NRB of finished good. So NRB of finished good is given how much? That is given 20, because NRB is less than what cost price. Therefore both means, can I say, in that case raw material will be valued at, one thing is clear, cost price or replacement cost, whichever is lower. Okay sir, write down. Now valuation of inventory. For finished goods, cost price how much? NRB how much? Therefore value will be lower. Point number 2. Point number B, this much you written. Okay sir. Point number B, for raw material, since NRB of finished good is less than cost price of finished goods, raw material is valued at lower of cost price. Cost price 10 only, and replacement cost 9.5. Therefore value will be 9.5. What is the value of total inventory, raw material, finished goods? So raw material it is 900, finished goods 1200. Okay, 900 and 1200. 900, 1200, 9.5, 20. So 900 into 9.5 is equal to 8550. 1200 into 20 is equal to 24,000. Total is equal to 32,550. Understood? Easy. Same thing. You can see same answer is given. Okay, sir. Any doubt? चलेगा. Okay, sir. So 8 we have done, 14 we have done, 15, 16 you do by row. I think this much too you have understood. Any doubt? Super easy. चलेगा? Yes, sir. Now come to the next point, cost formula. Now, cost formula from examination point to depend upon the information given in the question. But they may ask some multiple choice question for the you to understand which cost formula will be used at which particular point of time. Means when you use which cost formula. Now when I say cost formula is used to determine cost price per unit, to find out cost price per unit, correct? And for that purpose inventories are divided into two categories: inventories which cannot be interchanged, inventories which can be interchanged. When I am saying inventory which cannot be ordinary interchangeable, it means these are expensive items. The inventories which are not ordinary interchangeable, simply speaking, these are expensive items. Expensive, or I can say these are what? These are dissimilar items. We can say these are not homogeneous. Dissimilar. Okay, means these are not homogeneous items. So whenever these are not similar, so we can't apply average costing because all units are different. For example, if you are doing construction of building, so all building will be different. Every building have their own specific cost. They will have own specific cost now. Or if I say you are doing construction of aeroplane, so aeroplane will be designed as per the specification given by the customer, and each aeroplane will be different. It is as simple as if suppose you are doing construction of furniture, the furniture will be constructed as per the specification given by the customer. Therefore, each furniture, whatever you are designing, whatever you are manufacturing, will be different. So normally, if that is the case, if each unit are different, if each unit are dissimilar, and that cannot be interchanged from other units, whatever you are producing, then we apply specific identification cost. Specific identification cost means we apply unit costing. Unit costing means what? For each unit, identify the cost incurred and then total it. Component remains same. Whatever we have done, component remains same. But for each unit, you need to identify how much cost has been incurred and you need to identify the cost price per unit. That will depend upon the information given the question. Only you need to retain this term for MCQ type of question. Whenever inventories are not ordinary interchangeable, we apply specific identification cost. But if the inventories are ordinary interchangeable, means similar unit. Similar. Correct now. Are you getting? For example, if I am producing this calculator, so I will not manufacture one calculator only. I will produce in bulk quantity. Suppose 1 lakh quantity I am producing, so each units are interchangeable. They are similar unit. In that case, they are given two valuation technique. Like if the actual cost can be determined, then we apply either first in first out method and weighted average price method. First in first out method, weighted average price method, from my point of view, you know how to apply FIFO method, how to apply weighted average price method. Because in CA Inter, they will not ask a specific question of FIFO or weighted average price method. But if suppose they give, you should know how to apply FIFO, how to apply weighted average price method. But from my point of view, you have done in your CA foundation or in your what? In your BCom also, if you are from direct interview, you know about FIFO and weighted average price method. But I will take one question to give a revision of what FIFO and weighted average price method. Correct? FIFO means first in, first out. Weighted average price method, of course, we need to understand what. But when the actual cost can be calculated, when the actual cost can be determined, then we apply FIFO or weighted average price method. So whenever you apply FIFO weighted average price method, it means, can I say, we need to maintain our stock records. Means in this case, we need to maintain our stock records. Means we need to have some inventory control system. Inventory control system means how much inventory was in opening stock, then how much purchase, how much sold, and how much left every day, daily basis. Then only you can apply FIFO or weighted average price method. But can you say practically saying, every business, every entity do not maintain stock record. In that case, can you say actual cost cannot be determined? In that case, we can't apply FIFO weighted average price method because of that reason. What is to say that if you are not able to determine actual cost, then calculate approximate cost by applying two technique for inventory valuation. So they are given two technique for inventory valuation in case you are not able to apply FIFO or weighted average price method. Correct? What are the two technique we need to understand? First, they have given adjusted selling price method that they have given for non-manufacturing business, and second they have given standard costing for manufacturing business. Correct? Only you need to keep this term in your mind. Means from this an MCQ question can be asked. So what I said, once again I repeat, for the purpose of cost formula, first you need to identify whether inventories are interchangeable or not interchangeable. If inventories are not ordinarily interchangeable, then we apply specific identification method. If inventories are interchangeable, then if the actual cost can be determined, we apply first in, first out method or weighted average price method. But if inventories means if actual cost cannot be determined, then we calculate approximate cost by applying two techniques for inventory valuation. For manufacturing, we apply standard costing, and for retail business or for non-manufacturing business, we apply adjusted selling price method. Correct? Understood? Have you understood? Correct? Now, in this standard cost, they will never ask in exam. Write down. No practical questions. Why? Because in costing you have one chapter named standard costing. The detailed discussion of standard costing will be done in your costing subject, and therefore in accounting they will never ask a question from standard cost. The standard costing you will do where? In your costing subject. I will not explain what is standard costing. Correct now. It is nothing but one type of approximate cost on the assumption that how much we can produce in a normal level of efficiency. Correct now. Detailed discussion will be done by your costing faculty. Okay, sir. The standard costing, they will never ask any question in exam in advanced accounting paper. It means they can ask question from adjusted selling price method. Yes. So what is adjusted selling price method? I will explain first. Then I will take one question from FIFO and weighted average price method. One thing is clear that last in first out is not applicable in India. AS2 has clearly identified that AS2 has given a clear information that we can apply FIFO or weighted average price method. It means we can't apply last in first out. So LIFO is not permissible as per AS2. LIFO is not permissible as per AS2. Now coming to adjusted selling price method. First I will take question from adjusted selling price method. Okay, madam. Adjusted selling price method. also known as retail price method. One thing is clear that it can be calculated, it can be applied only when we are not able to identify the actual cost. It means they have given one indirect way to find out the cost price per unit. What they said, you first find out units of closing stock, unit of closing stock that we can count, means on 31st March how much closing stock left, that we can count by making one stock taking. Yes sir. So units of closing stock multiply by what is the sale price per unit, sale price per unit. So can I say we every entity know what is the sale price of that closing stock, so multiply by sale price per unit. Even though you don't know cost price, but you are selling that unit in the normal course of business, you know sale price per unit, so multiply by sale price per unit. So you'll get sale price of closing stock. Correct. From this, if you deduct profit, then can I say automatically will get cost price of closing stock. It means can I say profit information will be given the question. So this profit information will be given in question. If it is given in question, can I say we can apply adjusted selling price method? It is indirect way. Indirect way means first find out at what price closing stock can be sold, minus profit margin, how much profit is included. The balancing figure will be cost price of closing stock, but this can be applied only when you can't apply actual cost method. If you can apply actual cost method, you can't apply adjusted selling price method. I mean, this can be used only when they ask in the examination. Otherwise, you can't use adjusted selling price method. Understood? Have you understood? Chalega means if I say example, that is, units of closing stock 1 lakh, sale price per unit 20, and profit margin is 20% of cost. 20% of cost. Correct. Already now we know 20% of cost you can't apply on sale price. It means you need to convert 20% of cost on what percent of sale. Correct now? Means we can say 20 by 100 of cost, which is nothing but 20 by 120 of sales, which is nothing by 1 by 6 of sales. So we can say 1 by 6 of sales, or if you multiply by 100, you'll get in percentage. This you know. So 1 by 5 of cost is equal to 1 by 6 of sales. So that you need to understand. That already I have discussed in my basic concept how to convert GP margin in terms of cost into GP margin in terms of sales. That already I have discussed. Got this point? Bata. Correct. Now, what is the solution? First, we'll find out sale price of closing stock. That is what? 1 lakh multiplied by 20 is equal to 20 lakh, less profit. Profit will be 20 lakh into 1 by 6. So 20 lakh into 1 by 6 is equal to 3 lakh 33,333. That is 16 lakh 66,667. Correct? Understood. So this will be your cost price of closing stock. Very simple. But can I say life is not so simple? If they will give this type of question at CA Intel level, then can I say anyone can do it? So they will just try to what? Confuse you. I hope this much to you, but this is what the direct question. But they will not give you direct question, they will give you the question in indirect way so that you need to apply your common sense thoda sa. But I hope this to you have understood. This you have understood? Correct. So this is your adjusted selling price method. I will take two questions, very good question. First, let's see. Under adjusted selling price or retail price method, cost price of closing inventory will be sale price of closing inventory minus profit margin. Let us take two questions. And both the questions are good question. Till means normally this type of question has not been asked in exam, but anytime they can ask. Come to question number 2 first. Question number 2. What is given? A trader purchased certain articles for rupees 85,000. Okay. He sold some article for rupees 1,05,000. Okay. The average percentage of GP margin is 25% on cost. Opening stock of inventory at cost was 15,000. Calculate the cost of closing stock. Means first they have given how much they have purchased 85,000. Then how much sold for 1,05,000. And opening stock of inventory at cost was 15,000. Means you can see they have not given closing stock. And they have asked you to calculate a cost price of closing stock. However, they have given GP margin on cost. So how to calculate? We are doing question number 2. First, what is the opening stock? How much is the opening stock? Opening stock is what? They have given 15,000. Okay. Then how much purchased during the year? Purchase during the year is how much? That is 85,000. 85,000. It means, can I say this is the cost price of goods available for sale. This is the cost price of goods available for sale. 1 lakh. The cost price of goods available for sale. Correct. Now, if in this I add profit. So what is the profit? Profit they have given 25% of cost. So this is also cost only. We will say 25% of 1 lakh. 1 lakh is the cost. So directly we can apply. So this is 25,000. Okay, this is 1,25,000 is the sale price of goods, total goods available for sale. Means that total goods, opening stock plus purchase can be sold at rupees 1,25,000. Means you purchase we purchase 85,000 and already you have 15,000. This total unit can be sold at rupees 1,25,000. Are you able to understand? What is the sale price of goods available for sale? So this is the sale price of goods available for sale. Now from these, how much you have sold? You can see they have given during the year the sale was 1,05,000. Less sales during the year. During the year is 1,05,000. It means out of 1,25,000, how much you have sold? So what is left? That become closing stock. So what is the closing stock? So 1,25,000 minus 1,05,000. So 20,000 is the closing stock. But this is the cost price or sale price? This becomes the sale price of closing stock. This is the sale price of closing stock. Sale price of closing stock. Are you able to understand? One second. Your opening stock was 15,000 at cost price. You purchase 85,000 at cost price. These are total goods available for sale. With this much you can sell. Now, if you have added profit margin to 1 lakh, so that becomes sale price of total goods available for sale. Total goods available for sale. Out of that, how much you have sold during the year? So, out of 1,25,000, which was sale price, you have sold 1,05,000. That is also sale price. So, whatever remain, that becomes the sale price of closing stock. Now, from this, if a minus profit, now profit margin. So 25% of cost is not 25% of cost. Can you apply on 20,000? No. The 25% of cost is 25 by 100 of cost to 25 by 125. So your profit will be 20,000 into 25 by 125. This you have understood. Means 1 by 4 of cost is equal to 1 by 5 of sales. So you can say 1 by 5. Are we able to understand? So 20,000 into 25 divided by 125. So your profit will be 4,000, which is included in 20,000. So what is the cost price of closing stock? The cost price of closing stock is 16,000. Got this point? Have you understood? Thora. Interesting. Just try to understand. After foundation, directly you are coming to C enter. I am teaching in this way. Thora sa matha will become baj. But I think, once again, let us explain with what? Trading account. You will better understand. What was your opening stock? 15,000. What was your closing stock? Sorry. What is your purchase? What is your purchase during the year? Purchase during the year is 85,000. Means this was the goods available for sale. This was the goods available for sale. Now just try to understand. Correct. Means out of these, some goods will be sold. So by sales was how much? 1,05,000. Sale is 1,05,000. And by closing stock at sale price, I mean, I don't write, you don't write, only listen. At sale price was 20,000. Means 1 lakh can be sold at 1,25,000. 1 lakh can be sold at rupees 1,25,000. So overall profit, if I sell entire goods, is how much? 25,000. So this is the sale price of goods available for sale. The sale price of goods available for sale is how much? 1,05,000 plus 20,000. That is what? Are you getting? 1,25,000. But in if we don't measure closing stock at sale price, we measure at cost price. So this 20,000 include how much profit? 4,000. It means cost price 16,000, and your profit is only how much? Your profit will be this minus this. Means you can earn only profit on sale. So therefore, we measure closing stock at cost price. Therefore, we deduct profit from the closing stock. And closing stock is measured at cost price. So what is your actual profit? 1,05,000 plus 16,000 minus 1 lakh. So you have earned a profit of 20,000. And you can see this 4,000 was unrealized, means not yet done, but total profit was 21 plus 4, that is 25,000 only. Now, this is the concept. Have you understood? Have you understood this? Because this question right now I have done. One more question you will do right now. That is more interesting. Have you understood this first? What we have done? Opening stock at cost price, purchase at cost price. That is the cost price of goods available for sale. Now we have added profit on that. So that become the sale price of goods available for sale. From that, how much sale during the year? If you minus that, you'll get sale price of closing stock. From sale price of closing stock minus GP margin, that will be the cost price of closing stock. Understood? Correct. One more question. Come to 13. Question number 13. This is also interesting. From the following information, calculate a historical cost of inventory using adjusted selling price method. Adjusted selling price method means what? Retail price method, both are same. You can see sale during the year, cost of purchase, opening stock is nil. Now they have given closing stock at selling price, but what is good in this question, they have not given what? GP margin. They have not given profit margin. It means first you need to calculate profit margin, then only you can calculate cost price of closing stock. Can you do this by your own? I am giving you 5 minutes. I'm just giving you 5 minutes. Let's see how many of you can do it. Let's see. I'm giving you 5 minutes. Apply your common sense. I've just given hint. Apply whatever we have done in previous question. But in previous question, GP margin was given. In this question, GP margin is not given. It means first you need to calculate GP margin. Then you can find out cost price of closing stock. Apply thoda sa common sense. Okay, sir. Don't see the answer. You are not supposed to see the answer when I have said do it. So don't see the answer. Okay. Done? Chalo. I will help you out. Let's see what you have done and what was expected to be done. Opening stock, how much given? Nil. Always write down opening stock. There might be some opening stock. Okay. Plus purchase during the year 2 lakh. So this become cost price of goods available for sale. How much? 2 lakh. Now can we find out sale price of goods available for sale? Yes. Batao. What is sales during the year? 2 lakh. And what is the sale price of closing stock? That is 50,000. It means 2,50,000 is the sale price of goods available for sale. Means this can be sold at this amount. So this becomes sale price of goods available for sale. Means 2 lakh can be sold entirely at 2,50,000. Okay, sir. If this is A, this is B. So what is the total profit, that is 50,000. This become B minus A. So what is gross profit margin? We'll say 50,000 divided by 2,50,000 into 100. That will be what? If you do 50 divided by 250, that is 20% of sales. Why sales? Because we have divided by 2,50,000. Therefore, it is in terms of sales. Of sales. So in this way, you have calculated GP margin. Now you can apply this GP margin to find out the cost price of closing stock. Now, what is the sale price of closing stock? That is 50,000. From this minus profit. Profit is what? 20% of sale price, that is 50,000. So that is 10,000. So what is the cost price of closing stock? The cost price of closing stock is equal to 40,000. Have you understood? I think most of you have done correct only if you have understood. If you have not understood, there might be some mistake you have done. But with this solution, I hope you are able to understand what I just want to say. Correct? Got this point? Chalega. So what in this question we have done? Cost price of goods available for sale was given. Now whatever sales during the year and whatever closing stock left, that at sale price is the sale price of total goods available for sale. So if this minus this, that can be the total profit if we sold entire goods during the year. Correct? The total profit was 50,000. Sale price was total sale price was 2,50,000. It means we can earn 20% on sale on a uniform basis. And then if we deduct that profit margin from this 50,000, we'll get what? Cost price of closing stock. Chalega. Now can I ask one question? If you can say me correct answer for that, it means you have understood the entire concept. My question is that how much is the profit? How much is the profit of this year? What is the profit? Means I am giving you three options. What is the profit of the year? First option, profit for the year is 50,000. Second option, 10,000. Third option, 40,000. And fourth option, none of the above. This type of question can be asked in exam also. Batao. None of the above. So what is the profit of the year? How many are saying option number A? How many are saying option number B? How many are saying option number C? D is to bakwas. Out of these three, one will be correct. Batao. If you are saying option number A, 100% wrong. If you are saying option number B, this is also 100% wrong. Correct answer is what? Option number C. How many have said option number C? Give a clap. It means you have understood. And just try to understand. This was unrealized profit. Means this is not yet done. Means your profit is 50,000 minus 10,000, 40,000. It means once again, when I am saying profit for the year, you will prepare what? Trading account now. So opening stock how much? Nil. Purchase how much? 2 lakh. Sales how much? 2 lakh. And closing stock will be at what? Cost price, that is 40,000. And therefore, your profit is equal to what? 40,000 only now. Because the 10,000 what was included in the sale price of closing stock, that is unrealized. Unrealized profit cannot be recognized. Only realized profit can be recognized. So out of 50,000, unrealized profit was 10,000. Yet cannot be recorded in our books of account. Understood? So that is the concept. Understood? So your correct option is what? 40,000 is the profit for the year. I hope you have understood. Chalega. Got this point? So of course, this concept you have understood, but I need to take one question of FIFO and weighted average price method that I will not take right now. I will just ask you to revise FIFO and weighted average method concept from your CA foundation book or any other book, whatever you have. If you do not have any book, I will take one question, but not today. We'll take that question in the next class. Today, this much only. I think most of the point we have covered. Only few questions and few concepts are left that will complete tomorrow, and tomorrow we'll start a new accounting standard also. Okay, sir. Understood. To today this much only. Thank you very much. We'll meet in the next class. Till then, bye bye. Take care. Enjoy your remaining day. Bye bye.